Dividend investing is a tried and true method of wealth accumulation that offers inflation protection in a way that bonds do not. But finding top-notch dividend-paying companies can be a challenge. In this video, we're going to highlight the chief factors investors should be on the lookout for in their search for worthy dividend-paying stocks. So sit back, relax, and learn. When vetting dividend-paying companies, long-term profitability is a key consideration. Although any company can occasionally experience a profitable quarter, only those that have demonstrated consistent growth on an annual basis should make the cut. Specifically, investors should seek companies whose long-term earning growth expectations range between 5% and 15%. But be aware, companies whose growth exceeds 15% tend to experience earnings disappointments, which almost always nick the stock price. Next, investors should strive to find companies with healthy cash flow generation, which is needed to pay for those dividends. Finally, a minimum 5-year track record of strong dividend payouts signals continued dividend growth. Of course, it's essential for investors to purchase their shares prior to the ex-dividend date. Steer away from debt. Investors should avoid dividend-paying companies that are saddled with excessive debt. Simply put, companies with debt tend to channel their funds to paying it off rather than committing the capital to their dividend payment programs. For this reason, it's imperative that investors examine a company's debt-to-equity ratio. If that figure sits north of 2, move on. Check sector trends. While scrutinizing a company's numbers is key, it's no less essential to look at the broader sector to cultivate a more holistic projection of future performance. Case in point, an oil company may be thriving, but a plunge in oil prices is likely to spike demand while decreasing supply. This may result in stock price depreciation and decreased dividend payouts. For another example, look no further than the aging baby boomer population, which will inevitably skyrocket the demand for healthcare services over the next several decades. Although this doesn't guarantee the performance of any single healthcare provider, generally speaking, healthcare stocks are resilient enough to weather broader market plunges. This paves the way for steady dividend increases moving forward. Be mindful of the fact that a sector's behavior may change over time. For example, while investing in the soft drink industry has historically been a safe bet, consumers are becoming increasingly health conscious. Consequently, most major beverage companies are migrating to the healthier alternative drink space. But this shift will take time. Investors should recognize this before committing their hard-earned dollars to beverage company names. Here are some of the top high-paying dividend stocks. First up, JP Chase, JPM. Dividend yield of 3.5% with annual dividend of $4 per share. JP Morgan is one of the largest banks in the US and is run by highly respected CEO Jamie Dimon. The bank navigated the 2008 financial crisis better than most, and its stock has appreciated more than 5-fold since then, all while paying a sizable dividend to shareholders. Number 2, Exxon Mobil, Exxon, with a dividend yield of 3.9%. Annual dividend of $3.52 per share. Exxon Mobil is the largest oil and gas company in the US and can trace its roots back to John D. Rockefeller's Standard Oil empire. In 2022, Exxon set a goal to reduce or offset greenhouse gas emissions from its operations to zero by 2050, in response to pressure from investors and the public about the company's role in climate change. Number 3, United Parcel Service, UPS. Dividend yield 3.1%, annual dividend $6.08 per share. UPS is known for its brown trucks that deliver millions of packages each day. The delivery giant does business in more than 220 countries and has consistently shared profits with shareholders. Number 4, Verizon Communications, VZ. Dividend yield 5.8%. Annual dividend $2.56 per share. Verizon is a leader in communications and technology services. Along with AT&T and T-Mobile, they provide the majority of mobile phone services in the US. Verizon generated more than $130 billion in revenue in 2021. Number 5, AT&T. Dividend yield of 6.1%, annual dividend of $1.11 per share. AT&T is another telecommunications leader that generates solid cash flow for shareholders. Recently, the company has divested some assets and cut its dividend by nearly half as it focuses on 5G investments and paying down its heavy debt load. Dividend stocks or funds can be a great way to earn additional income. Keep in mind that if you own these securities in a taxable brokerage account, you will need to pay taxes on the income you receive, even if you reinvest those dividends. If you want to avoid taxes, you will need to own the shares in a tax-advantaged account such as an IRA or 401k. Be sure to research any dividend stocks carefully before investing. Some companies with high payouts today may be forced to cut the payments if their business suffers.